Good afternoon, everybody. Today we are here to talk about cash flow in this coronavirus crisis. And over the last few weeks, businesses have seen their financials or their cash flow being hit by different challenges. Obviously, the business has dried up. People have been slow to pay off. So what we need to do is look at what is it that we can do in the current scenario or current situation to take it forward. Let me share my screen here where I have put together a presentation, which I'll share with you in a second. Yeah. Right. So let me turn off my camera now so you can focus just on the screen. So like I was saying, cash is the lifeblood of every business, and even during the normal times, it is one of the key concerns for the business. Now, because of the coronavirus crisis and the delicate balance between the sales, collections, overheads, that has been disrupted. So it is really important to find ways to manage your cash flow during these times, and it's more important now than it ever was. Now, cash flow has been an issue for most businesses before coronavirus as well. So last year, researchers found that UK SMEs were owed more than 34 billion in late payments, with an average debt owed to business of about 34,000. These delays prevent small business owners from paying their own creditors, as well as taking care of the fixed overheads. Let me see if yeah. So Mike is here from Hillingdon Council, Hillingdon Chamber of Commerce. Mike, are you there? Are you able to talk? And let's see if we can get him on first. Hello, Mike. Are you able to hear us? He had some challenges with his mic last time, so it seems like it is the same thing again. Okay, let's move on in that case. So what I wanted to talk to you about today is how are we going to deal with these crises, and how we're going to look at managing our cash flows during these times. Now, if you can question answer box, tell me how many of you just answer in a question answer box is how many of you actually have a cash flow projection or cash flow statement going. One is cash flow from the past, which is trailing, and one is cash flow projections in future. So looking in future for next 3 to 6 months. Can you just put in your question answer box if you have that one going, or is it something that you've been thinking about, and that is something you want to be working on? So if you just put in your question answer box, just want to get an idea how many people actually have cash flow. Historic, yes. Future projections, no. Okay, interesting, very interesting. Yes, I've been thinking about doing a cash flow projection. Yes, I think this is the right time to do that. Because it is really, really important. Okay, I know about cash flow, but have never got around to it. Yes, yeah. I mean, a lot of people have heard about cash flow, but they've never gotten around to it. But this is a good time to start working on it. Okay, yeah, cash flow. This is normally my accountant would do. Yes, accountant would do it if you ask them to do, but whether you're looking at those reports or not, or what decisions are you making based on those reports is really important. Okay, I would like some help in doing my cash flow. If you could please help me. Oh yeah, sure, why not? I will share some options with you in terms of what we can do about cash flow. I'm going to share some information with you today, and you will get some ideas about doing some cash flow yourself. Also, we will talk about if you need some help, what we can do. Okay, so that gives me an idea. So most of the people here on this webinar either have done cash flow, or but mostly looking at the past, or have not done the cash flow so far. So before we move forward, let's look at just give you a bit of brief background about myself. I'm a business coach, and I'm based in Hillingdon, and I work with small and medium-sized businesses, working in terms of their financials, helping them grow in terms of their growth strategy, sales, marketing, or getting better results from the team. So that's what me and my team do, and we are based in Hillingdon Hayes. And just to make this webinar a bit more interactive, I would suggest we follow these tips. So use the question answer box to ask questions if you have. If you want to share something, please raise your hand. Because more we participate and more we get out of this session. And what I'm going to say is, like some of you have asked help, what I'm going to do, some of you will be able to get on with this information that I'm sharing with you. Some of you may need some help. So I am actually currently giving about 5 pro bono coaching sessions every week to the businesses that need help, because there are a lot of businesses who are struggling and they don't know what to do. So I'm setting some time aside every week and I'm gifting some sessions away. So if you do need some help, I will share my details at the end of the webinar, and you will be able to book something in the diary. So we'll see how we can get on with it. So in terms of cash flow, so why do we need cash flow? So in terms of, I'm sure you would have seen in business or in life for that matter, what gets measured gets managed or gets done or can be improved. That is the reason why we have all these sports personalities or the stats that we have in sports. There is a reason behind it. What is the average of a striker or any other stat that you may be talking about? There is a reason. One, you can measure the performance. Once you can track the performance. Second, then you can better the performance over a period of time. If you are not tracking the numbers in business, then it is, I mean, this is one of the biggest sins in number, if you're not tracking your numbers, because language of business is numbers. And if you don't know your numbers, you are just trying to drive a car without any direction, any sense of guidance in the car. So numbers, financial visibility, that is what it provides. So it is important to have that. So even though things were important earlier, because of this crisis, coronavirus crisis, it has become even more important to understand. It's more even to understand what numbers are looking like and where we are now, and what is it going to be like in next 1 month, 2 months, or 3 months time. So if you don't know the number, it is like putting your hand in the sand, so head in the sand. And I've seen a lot of people do that. Don't let this be you. So you have an opportunity. You are on this webinar anyway, so you have an opportunity to do something about it. Because just because you do not enjoy something doesn't mean that you run away from it. If you've chosen to be in business, you have to learn business, and learning the numbers is equally important in the business. So that is what this whole thing is about. Learn your numbers, understand your numbers. Now, what are the things which are important in the business in terms of number? So there are some of the things that I got here. That's basically looking at business momentum analysis. So looking at how the things are moving in your business, how your sales is moving, how your profits are moving. Looking at your product and profitability mix in terms of which products are bringing profits, which products are not bringing that much profit. 80-20 rule applies here as well. 20% of your products or services will be bringing 80% of the profitability. So understanding that and making decisions based on that. Customers ABCD strategy. So not all customers are equal. Some customers will give you more money. Some customers will give you less stress. So it depends on how you categorize your customers. And during these times, it is very, very important to focus on the right customers and make sure you provide the customer service that they deserve. So categorizing customers based on their past performance with you or profitability. Looking at product penetration mix. I'm sure you must have heard of G matrix. It's also magic matrix. It's basically looking at what products are you selling to which customers. This is one of the key profit generation strategies in any business. We're looking at who's buying what and what are the opportunities to sell to other people. So if you need to know any of these, if you want more information about any of these, please let me know, or please book a session. I'll be happy to go through them with you. Now, what we are talking about today is focusing on cash flow, because cash flow is the key. Profit is the theory, but cash is king. I'm sure you must have heard of that. And cash is really, really important in the business, because cash is like, if you have a Ferrari, let's say you have a Ferrari, if you don't have any fuel in the tank, then that Ferrari is no good. It's just a showpiece, right? So cash is like the fuel in that Ferrari. You could have the best business, you could be the most profitable business on this planet, but if you run out of cash, then you and that Ferrari without fuel is same, because that business is no good, because that business will not take you anywhere. So running out of cash is not an option. But a lot of people, when they're running the business, they have no idea about the cash flow. There may be some visibility about how cash has moved in past, but it is equally important to look at how cash is moving in future. So when you're driving a car, where do you spend most of the time? Do you spend most of the time looking in the rear view mirror, or do you spend most of the time looking in front of the car, on the road in front of you? So think about it. How much time do you spend in your business looking forward in terms of the numbers? So that is why it is really, really important to have the cash flow projection, because cash, the way it has moved, you can't really do much about it. It's gone, it's done, dusted, finished. But what is coming in front of you, what the projection is looking like, is equally important, if not more important. Technically, it is actually more important than looking in the past, because you cannot influence the past, but you can always influence the future. So that is why it is important to have the projection ready. Now, what is a cash flow forecast? So cash flow forecast is mainly, it is understanding how the cash flows in your business, right? So it tracks basically how much money has gone out, how much money has come in, when has it gone out, and when is it coming in. So you can manage your expenses or your investments accordingly. So understanding your cash flow is vital for your business, and forecasting plays an important role in your finances. So it is important to have an eye on how the cash is moving in your business. Now, it includes your all the income, all the expenses, investments, anywhere that the money will go or money will come from. Okay, so typically cash flow. When I start working with businesses, I work with them in the terms of cash flow. First thing that we do is we set up a cash flow projection. We do at least a monthly, but ideally I do cash flow on a weekly basis. Weekly cash flow projection and weekly cash flow tracking is the best way. If your business has really tight on cash, then I would suggest you do it on a daily basis, daily cash flow. And I'm going to share some of the templates with you, and which will help you understand this even more. But looking at what sort of frequency you need to be tracking depends on where your business is at. If your business is really ill or suffering, then obviously you would need to take the measure of the temperature and everything else more regularly. But I would suggest start with at least a monthly. Ideally, if you can, do it on a weekly basis. Now, what is it that we need to talk about, in terms of cash flow? So what it will show whether your business is meeting expectations or not. Okay, what cash flow forecast will allow you to do is you can budget for equipment purchase, okay, or for recruitment. If you want to get somebody on board, you need to see whether you can afford that person or not. If you want to buy something, you need to see whether you can buy that. When can you buy that? Okay, you can also see if you make any changes in the business, how does it impact the flow of cash? Because once you have that visibility, you are able to make better decisions. Because a lot of times people make decisions based on emotions rather than numbers. And when that happens, it's not the decisions are not based on logic, and they may or may not be the best decisions. If the numbers are based on this on logic and the numbers, the decisions will usually be correct. So that is why it is important to have that sort of information at hand. Okay, so it is really, really important to look at what is it that you can do. You may also do best case scenarios or worst case scenarios, and it is important to look at when do you need that loan and funding. And right now, if you thinking of applying for coronavirus business interruption loan, this is the first thing the bank is going to ask for. Bank is going to ask for your statement of accounts for last 2 to 3 years. So your financial accounts for last 2 to 3 years. They would want a cash flow for at least 24 months looking future. They would also want justification of what do you need the loan for. So you will need to summarize why you need the loan and where you're going to get the loan, how you're going to be using the loan for. And also, they may also ask a list of your assets and liabilities. So they would ask for balance sheet, yes, but they may also ask for your personal assets and liabilities also. And if your financial year end was like 2 or 3 months before this crisis, like maybe it was till December, they would want some management accounts for the remaining of the month. So the bank, when they give you the loan, how do they make the decision? They make the decision based on the numbers, whatever information you will submit to them. However, when the business owners run business, how do they make decisions? They make the decision based on cash flow. So if the bank is relying on numbers to make decision whether it's a right investment for them or not, why would a business owner not do that? So it is really important to question sometimes, how are we running our businesses, and looking at, for in future, how is it that we're going to be looking in future to manage the cash flow, how the money is coming, when the money is going out. So what is it that you include in your cash flow? The sales. So it's simple. All the money that is coming in, sales or any other money coming in, whether it's, even if you're putting money inside as a direct loan, that needs to go into cash flow projection. If you're taking a bank loan, that needs to go into cash flow projection. So any incomings into the business needs to go into the sales, the incomings of the cash flow part of the sorry incoming part of the cash flow projection. What is going out? So all the payments that are going out, all the invoices that needs to be paid off, any projected costs that you think may come up. Okay, remember, all the money that is coming in and out, it includes VAT. So you need to include VAT when you're putting amounts in cash flow. So that is what is difference between cash flow and P&L. Profit and loss does not include VAT. Cash flow includes VAT. So all the entries that you will make in cash flow will include VAT. And remember, it is the date you put when the cash is going in or out, not an invoice date. So you could raise an invoice today to your customer or your client, but if you're not getting paid till next 30 days, the cash flow will be, the entry in the cash flow will only be when the money is going to come in, not when you raise the invoice. And that is why it is so important to understand. You may have a false sense of feeling where you're secured because just because you've raised an invoice. Raising an invoice does not guarantee the money in your bank. If something goes wrong at customers or clients end, you may not have that money. So that is where that false sense of security comes in. So it is important to understand that we are looking at when the money is coming in and when the money is going out, because you can play around with the money. If you have to make some payments, if you can delay the payments, if you need to delay the payments, you can always delay that. But having a cash flow projection will help you do that in terms of how we can look at delaying the payments. So all your fixed costs like rent, salaries, rates, your utilities, bills and memberships and things like that, tax payments, all of them are there. All the So these are the fixed payments. So what you do is, normally you look at your history of the cash flow and look at some fixed payments that are going out every month. Usually they do not change from month to month. So you can put those figures first on a projected basis, a forward looking. So second week of month, this payment goes, third week of the month, this payment goes. So you can start projecting. However, there are some payments which are linked to sale. So those are variable costs. So those need to be linked with the sale. So whenever the money is coming in, it needs to be linked accordingly, or when the invoice is being raised. So you need to differentiate between the two. So you need to be able to differentiate between the fixed cost and the variable cost. Fixed costs will remain fixed and they will go at a certain time of the month from the business, whereas variable costs, they would go out when the business makes a sale or business does a transaction. So or business when it runs an operation which needs to do that. So for example, cost of parts, sometimes cost of subcontracted labor. These are all variable costs. Okay, anything that you need to incur while delivering that product or service is a variable cost because that is linked to that particular sale. Fixed costs more like rent, salaries, utilities, memberships, things like that which are fixed. It doesn't matter whether you do any sale or not, are going to be fixed, and that is easy to populate. So cash flow forecast, for example, let's have a look at this one here. So in this cash flow forecast, what we have done is we have done it on a job to job basis. So if you look at it, so job one, job two, cash in, cash out. So what we are looking at for each job, what cash is coming in and what cash is going out, and you're totaling it on a weekly basis. So in the here it gives you the position here, what is the cash position, and as long as this position is positive, it is okay. Now this is basically boils down to how it is the opening cash balance, how the opening cash balance started, and then you take it forward from there. So I'll show you another cash flow projection. Let me just open that file here quickly. So if you look at this cash flow template that I use with clients, I'll just share this with you in terms of screen. Here you go. So look at this. So in this one, what we are doing is, this is a cash flow. Let me just minimize a little bit just to show you the whole picture first. So this is how the cash flow forecast is looking for about 24 months. And this is what we have been using to give to the banks when we are applying for the loan. So the way it works is, you know, all the receipts that are coming in here. This is a monthly basis cash flow, and all the payments that are going out are here. Purchases may be linked to sale, or purchases may not be linked to sale. So all the expenses are, all the incomes are coming in here, and all the expenses are going out, which are here. And these all include VAT figure. And this is the opening cash balance here. For example, let's say this opening cash balance is 46,000. So let's say in January you got a sale of 50,000, right? So this is here, and in January you did a sale. In January you did an expense of 65,000 because you're buying some stock, for example, plus other expenses. If you put it there, it'll automatically pick up your net cash flow is 15,000. Opening was this, so this is the cash balance, and this is the number you're going to be tracking, which will give you an idea of what my cash balance is looking every month. This is good for bank, but if you're doing it for yourself, like I said, do it on a weekly basis. Right now, in this case, some of the expenses, for example, salaries, okay, some of the payments here, rent and all these are fixed payments. You would know when these payments are going out. So you look at your bank statement for last 2 or 3 months, get the dates for these expenses. So all the outgoings which are there, you start projecting them in terms of when is it going out. So when you're doing it on a weekly basis, you're able to do that. If you're doing it on a monthly basis, you're still able to do that. How much of my wages and salaries are going every month, or how much of my rent rates going every month, or what is my telephone cost every month. So some of the fixed expenses can be populated without any problem. Some of the expenses will vary a little bit. Maybe, for example, your motor expenses and fuel expenses may vary a little bit. Traveling and entertainment will vary a little bit. But you can always put an estimate. So, for example, if you've been spending 200, 300, 200, 300 for past few months, put a 300 figure, because that is the figure that you could expect to spend. So in that case, just put it in there, whatever your figure is going to be. So you can actually look at what is the money going out, and then you look at what is the money I can expect. So if you're doing some work and your 30-day is your payment period, so if you do an invoice in January, you would likely get paid in February. So put the money coming in February. So whatever business you do in February, money comes in March. So that is the way you start projecting, and you can estimate the figures, because you can estimate your sales, what sales you can expect. And once you have that, purchases, if they're linked to sale, you can create a formula to link it to that. Otherwise, you can just create your cash flow projections looking forward, and that will give you an idea. Now, cash flow projection is not done once. It needs to be visited every week to see whether you're still on track or not. It's like a sat nav. Okay, so you don't just put a postcode in sat nav and then forget about it. Every time, if you go off the route, for example, if you miss a turn, Sat nav will bring you back on the route from some other route, or some option or the other. And that is the purpose of cash flow. It is supposed to bring you back on track. But if you're not looking at it, it will not bring you back on track. So it, as much as it is important to build a cash flow forecast, it is equally important to follow it, look at it, assess it, make some decisions based on it, change the figures. So for example, some payments, if they have been delayed, just change them. So if you were supposed to make a payment in March, but you did not make the payment in March, you move them into April or whenever you're going to make that payment. So you can play around with it in Excel sheet. So which is quite simple. And once you get a hang of it, you will actually look at it every week, which will help you make better decisions. So that is what I think it's important to look at in terms of how we're going to be building the cash flow. So let's do this. Come back to here. All right. So put your questions in the question box. If you have any question on cash flow, how we're going to create a cash flow projection. If you have any questions, please put in there so I can take it up with them. While we speak, anything that you want to talk about or ask question, please keep putting it in there so I can answer the questions at the same time. All right. So so who has raised hand? Somebody's raised hand. Right. No, nobody's raised hand. So yeah, if you have any questions, please put it in the question box. I will be happy to answer that question. Okay. What are we looking at? So the next thing we're going to talk about is what is it that we can do to improve our cash flow. That's another thing. Once you've built a cash flow projection, it is equally important to manage it and improve the cash flow. And to do that, the most important thing is the debtor and customer management tracker. What you need to do is look at how we're going to be tracking the payment that we are supposed to receive. So you've done the work, you've sent the invoice, but you have not received the payment, or how are you going to receive the payment? A lot of people that I speak with, and some of the clients that I start working with in initial days, what I have found is people do not raise the invoices on time. Even if the work is done, they would delay raising the invoice. Because remember, when you raise the invoice, if your credit terms are 30 days, they will pay you when they will receive the invoice 30 days from there, not when the work was finished. You could have finished the work last month, but if you don't send the invoice, you're not going to get the money. So it's equally important to raise the invoice. Okay. Yes, Satpal, you're right. So if you're using a software like Xero or QuickBooks, you can get the historic cash flow from there. It is easier to get the historic cash flow from there. But when you're doing the projection, then you would have to do it in an Excel sheet, ideally on a monthly or a weekly basis. Even though your cash flow projection can be done in Xero and other QuickBooks as well, but it is better to track it on a weekly basis in an Excel sheet so you can play around with it. So first, obviously have the cash flow projection. Second is look at what are you going to do to improve your cash flow. So you need to have more money in than the money going out of your business. That's the key to cash flow, and that is about collections. Whether you're sending the invoices on time or not, whether you're collecting the payments on time, or whether you're chasing the payments on time or not. How many people are paying within 30 days? How many people are paying in 30 to 60 days? How many people are paying in 60 to 90 days? How many people are actually paying after 90 days? And what is it that you're doing about getting those payments in? So it's important to do that. So also what is important is to improve the cash flow. While you're collecting, you also need to be focused on improving your sales and marketing. So cash flow is linked to sales and marketing. It's not just a financial tool, it's also a sales and marketing business growth tool. So you're going to be looking at in terms of what leads are you generating, where the leads are coming from, how many of these leads are getting converted, because then you can forecast your sales. While you're forecasting your costs, you need to be able to forecast your costs. You can forecast while you're forecasting your cost, you need to also forecast your sales. And how will you forecast your sales? By tracking your sales and marketing activity, because activity will give you some results. So if you do some marketing activity, it will generate a client for you. If you get a client, you will be able to invoice to them. So there is a process which flows from sales, marketing to cash flow to collection and all that. So it is all linked. So while you're doing all of this, do not forget that you need to be focused on your sales and marketing activity tracking as well. So because that is going to flow into your cash flow. So this is one of the examples. So you can have how many leads are coming in from each of these strategies, for example, and how many are being converted from here. All right. And what is the value of the new orders which are coming in. For example, in this week, there is only money coming in here, but there is no money coming in here. And if that is the case, then you need to be able to plan accordingly. Either you need to improve your sales and marketing, or you need to look at other ways of bringing the money in. So either you're looking at collecting the money which is owed to you, or you're looking at getting some new businesses. So that's why it's important to have everything flowing into each other. Okay, any other question, please type in the box, guys. Okay, so when we're looking at sales pipeline like this, what you can look at when you're doing the sales pipeline, why would you want to look at sales pipeline? Sales pipeline will help you look at the timeline when the money is going to come in. You could have a lead generated, for example, today, but if your sales pipeline is not going to close that lead for another 15 days, then you cannot expect money to come in anything before 45 days, because even if you convert them into a client, if your payment terms are 30 days, then it will take 45 days easily. So you need to look at all of these. So you look at your marketing, you look at your sales, you look at your conversion, and then you look at your invoicing, and then you look at your collection to get a true picture of how the business is operating. Just looking at the profitability of the business does not give you the correct picture or the full picture of the business. That is why I'm covering these things as well here, so that you understand how each of them flow into each other and what is it that you need to do to make sure if there is a problem at step number 4 or 5, the problem needs to be fixed at maybe 2 steps before that, because the problem, if it has come at step number 5, there must have been something which has gone wrong at step number 2, 3, 4 before that, so that that is why it's causing a problem at step number 5. So understand that. Now, cash flow mistakes, these are the common cash flow mistakes people make. First of all, very, very basic, measuring your business's health by amount of cash you have in the bank. Now, what money you have in the bank will never give you a true picture, because you don't know what expenses are coming. You don't know when your more money is going to come in. So that is a stationary sort of a KPI. What you need is a moving KPI. So you need to know how the money is going to move. You could have 10,000 in your bank, and that will give you a false sense of security. But if you have payments to make, and the payments to make are 15,000 in next 5 days, you will not be able to do that. So you will struggle. So it is understanding when the money is going out and when the money is coming in, how much is coming in, how much is going out, rather than just saying, oh, I have 10,000 in the bank, so I should be okay. Second mistake people make, setting wrong credit limits. I've seen so many people do that, setting wrong credit limits. You need to be able to check the credit ratings of the customers or the clients that you work with. If they do not qualify, do not give them credit, because this is like very, very basic. Why would you want to work with somebody who cannot pay you? Because while delivering that product or service, you have already incurred cash or money or expense. So you have taken the money out of your pocket and given it to somebody, hoping that somebody will return it to you. And more often than not, people struggle in business because of this, because they do not credit check their customers, or they do not collect the money, and they keep spending money that, and gives them some false sense of hope. Oh, we have so much outstanding, this much money needs to come in. Yes, but is it actually going to come in? When is it going to come in? There's no point having that money in your account when you don't need it. You need to have it in your account when you need it. Not sticking to your clearly defined credit terms. So somebody is gets more than what their credit score is, or for example, whatever their credit limit is, you give them more than that. And sometimes people struggle with that, not chasing the money you owe. Like I was saying earlier, people do not raise invoices on time. Why? Because they're too busy delivering the work. But why in the hell would you not invoice? Because the work that you're delivering is for the reason to collect the money anyway. So don't lose the focus. Don't lose the big picture. You're doing all this work to collect the money, to make the money. So make sure you're raising the invoices on time. Make sure you're sending it across on time. making sure you follow it up on time, and making sure you get paid on time. Okay, so it is not, because what happens, you send the invoice. Now if your credit period is 30 days, they'll say, yeah, 30 days. After 30 days you call them and they say, actually we haven't received your invoice. And you say, okay, let me send you the invoice again. That way another week is gone. Even if they have the invoice, they will turn around and say, actually I haven't got the invoice, can you please resend me the invoice? So what is it that you need to, what is it that you need to be doing before the money is owed to you? So if your money is owed to you in 30 days, with sending them a reminder in 15 days saying, by the way, this money is owed in 30 days. If you haven't got the invoice, please let us know now. So some simple steps along your process will help you. Not having a debt collection process in place. So if you don't have a debt collection process in place, you will lose a lot of money. And that money will be used by somebody else to run their business. Not having financial policies in place. So if you don't have financial policies in place, I don't know what to say, because business is all about finance. As much as it's about sales and marketing, finance is equally important. And I'm sure your accountant will be able to help you if you ask for help. If you ask for help, your accountants will be able to help you with all of that. But the problem is we don't ask for help. Confusing budgets for cash flow forecast. So budget has a purpose. Budget is used to plan, but your cash flow forecast may be very different from budget. The figures will be different, the numbers may be different. So it is important to understand they have a different purpose and they have a different utility. So use them effectively. So don't confuse the two. Not having your monthly P&L statements. So even though if you have Xero or QuickBooks, a lot of people, they have it, but they don't even look at their profitability, not looking at their profit and loss statement. Because you can compare your profit and loss with your cash flow. Because if you're not making profit, if you're losing money on certain products or services, you need to be making some decisions from that. Using your cash flow to fund capital expenditure. This is one of the most basic mistakes people make. You buy something like a piece of machinery or a van or something from the cash in the business. Now, why would you do that? When you're going to use that asset over the next 3 or 5 years, why would you want to pay cash upfront for all of that? You need to be able to spread the expenditure for the utility of that asset. So if you're using it for 3 years, spread the payment for 3 years. Because remember, if you have the cash, banks will be lining up to give you the money. If you don't have the cash, banks will not give you the money. So it's better to have cash and bank coming to you to take the money rather than the other way around. Right? Failure to take action, that put you into contact with the cash. So if you don't, even if you look at all these mistakes and you recognize some of these mistakes you're making already, if you don't do something about it, you know where you're headed. So it's important to understand what is it that we need to do in terms of cash and in terms of finances. This is very appropriate here, and this is what the normal attitude of businesses are. If an invoice is due in 30 days, we pay it in 60 days. If it is due in 60 days, we pay in 90 days. If it's due in 90 days, then they probably don't need the money anyway. Because remember, if they delay the money paying to you, they keep the money in their business. That means they are able to finance their operation for that additional 30, 60, 90 days. And people who have good cash management system, they run the business with other people's money. So think about it. Are you running your business with your cash, or are you running somebody else's business with your cash? All right. So let's understand the cash gap. Yeah. So cash gap, and this highlights the cash flow. So basically, what happens if you're in a product-based business? So you buy the inventory here. Okay. And you pay the money here, because usually either you pay in advance or you pay on delivery. So this is the time the money is going to be paid out for this buying this inventory, right? Then you make that sale here, right? And then you have a credit period, whatever it is, whether it's 30 days, 60 days, 90 days. This is where the money is outstanding, but you haven't received this money yet. You have paid the money, all the money here, but you're receiving the money here. So this is what becomes the cash gap. Now, if you're not good at collecting or invoicing, your cash gap will be longer. If you don't know how to ask for credit from your suppliers, your cash gap will be longer. And this cash gap, more turnover you do, the bigger the business becomes, bigger the hole becomes. And this is the trap. A lot of businesses fail because of this. Because let's say if you're doing a 1 million turnover, you need to do a 1 million cash gap for 90 days. If you become a 2 million turnover business, you will need to do this cash gap for 2 million. So bigger the business and the cash gap is there, it becomes bigger a problem. So that is why the businesses which do not manage cash, they always have problems. They're making decisions based on whether we can afford it or not, rather than whether we need it or not. So that is the wrong way to run a business. Does that make sense? So let's look at some cash gap strategies. So put in the question box, what do you think we can do in terms of improving our improving our cash flow or reduce the cash gap? Come on, guys, put it in the question box. What do you think we can do? What are the strategies that we can follow? We're all learning from each other. I'm going to give you some as well, but I want to hear it from you. What is it that we can do? Yes, offer discounts for quick settlement. Yes. So if people pay quicker, you can give them a discount. Very good. Very good. Invoice on time. Absolutely. Fantastic. I love that one. This is one of the keys. Invoice on time. Because if you're not invoicing on time, then it is a problem. Because they will only pay when they get the invoice. Right? That is the time they start counting their credit days. Employ a part-time credit controller. Very good idea. If you don't have the resources, it is always better to get a part-time credit controller, because one, they're not emotionally attached to your customers anyway, and they would be better at chasing, right? And you can play good cop, bad cop as well with them. So it is always a good idea to have a credit controller. Very good. Good follow-up methods. Fantastic. I'm loving it. Come on, keep sending, keep sending. Send out reminders when invoice is due. Yes, absolutely, I agree with you. Don't send out reminders when invoices are due. Send a reminder 1 week before they're due, saying this is going to be due. If you have any problem or any question, ask now. Very good. Very good. Nice. I love it. Send monthly or quarterly statements so you are both on the same page. Yes, absolutely. Send regular statements to your clients so that they know how much they owe to you. All right. Don't be afraid to apply penalties if they don't pay. Yes, absolutely. You need to stop supplying if you don't get paid. Because if you're not getting paid, there is no point doing business with somebody who's not going to pay you anyway. So it is better not to do business with them. Call and speak to your contacts. Don't rely on mails. Yes, absolutely. This is one of the key ones. I agree with you. A lot of times I've seen people avoiding picking up the phone and speaking to their clients. They will just send them an email. By the way, you owe us this money. No. Just pick up the phone, call them and ask them and have a conversation with them. You're partners together, right? So ask them. Investigate any queries about the invoice from your customers quickly. Yes. So you don't give them an excuse to delay the payment. Absolutely. So if there is a query which is raised, please investigate it. Please get back to them. This is a priority. Remember, all the work that you're doing in business is driven towards you getting paid. That is the ultimate objective. If you're not getting paid, or if you're not, keeping your eye on the ball, you are missing the trick here. Everything is driven. The sales, marketing, operations, delivery, everything is driven for you getting paid. I like it. The client can be your advocate. It's typically the finance team that sits on the invoices. Yes, absolutely. And mostly they also do the same. They also play the good cop, bad cop anyway. So the business owner may say, yeah, I'll pay it, but the finance team will say, I don't have the invoice, or I'm busy, or I'm not this, I'm not that. So they also do that. So you need to manage those relationships. Absolutely. Great. Thank you for sharing. It's really good. So let me share some of the things that I have here, which is quite similar to what you have. Require partial or full payment on contract to be paid upfront. I believe, at least in my business, everything has to be paid upfront. I don't do credit. If you don't pay upfront, I don't do business with you. But whether you can do that in your business or not, that's up to you. You can always ask for partial payments. Finish projects so they can be billed or invoiced. Yes. So if there are projects which are going, or you can part invoice them. You don't have to wait for the whole project to finish. You can part invoice them. Invoice immediately on completion of payment. Systemize your billing and invoicing process. This is one of the keys. You need to systemize this, because this will make you happy, stress-free, and rich. if you get this right. Make sure you're looking at it on a weekly basis. Review it on a weekly basis. Reduce your credit term. If it's 30 days, reduce it to 7 days. You will lose some business maybe, but at the end of the day, you will save time chasing money. Give discount to early payments. Yes, that was one of the points which was mentioned here. Absolutely. You know, if people don't pay on time, you can always threaten them with, charging interest on the overdue amount, right? Outsource, like that was a credit controller. Get somebody else to do it for you. If you don't have the time, then get somebody else to do it. Reduce your inventory by using low inventory trigger method. Yeah, absolutely. So look at how much money is stuck in the inventory. If you are in a product-based business, look at how much money is stuck in the product. You could also do this. You can buy inventory, and this is what Amazon does, isn't it? They will ask you to send the consignment, and when it is sold, then they will pay you. So this is one of the methodologies which businesses use. You give me the stuff. Once I sell it, I will give you the money. So it is, yeah, that is one some of the strategies which can help you look at solving some of the challenges around cash flow. Right. Okay. Negotiate longer terms from the vendors. So ask for credit days from your suppliers. Look at what is it that you're going to do, that you can do to ask for more days to pay. So when you look at all of this, make sure you also look at what your future looking goals are. Okay, so if you do not have yet, or if you have not revised your target yet, what is it that December 31st of December 2020, what is your revenue going to look like for the whole year? Have you thought about that? Have you revised those figures? Because once you revise those figures, you will need to make amendments into your cash flow projections accordingly. What would be your year-end profit goal based on that? And what changes do you need to make to your business model? If there are any changes to be made, what is it that you're going to be doing? And does your business have a cash flow projection or not? If it does not have a cash flow projection, what is the next step that you're going to do? What is the next step that you're going to do to have that cash flow projection? Whose help you going to ask? Who are you going to sit down? When are you going to sit down? Make a time in your diary now. Take out your phones, put some time on your calendar, say this is the time I'm going to look at all the information and what is it that we need to do. Remember, I don't expect everybody to be financially, very literate or very smart. However, since you got into the business, you have to learn the basics, because you remember, business language is numbers. If you want to run a successful business, you need to know the numbers. So it is really, really important that you know the numbers, get a handle. If you don't know something, please ask. Please take help from somebody. Remember what Jim Rohn says. Jim Rohn says, never wish your life were easier, wish that you were better. So what is it that you need to do? Work harder on yourself than you do on your job or your business. It's you as a business owner who needs to develop these skill sets or these habits to become better. It's easy to just shrug it off and say, you know what, I'm going to ask my accountant to do it. Or I will get to it when I get the time. That is not how it works. If you have chosen to be in business, learn to live by the rules of the business. So this is one of the rules of the business. Make sure you're looking at your numbers regularly. Make sure you're doing your numbers regularly for you to look at them. Make sure you're projecting where your business is headed. It's just like driving, like I said. If you're driving a car, where are you looking most of the time? Are you looking in front or are you looking at the back? And only two documents look in front. One is the cash flow projection, second is the budget. Rest everything is looking backwards or where you are. Balance sheet is the present, but everything else is looking backwards. So cash flow projection and budget is the key. Budget may be not so important, but cash flow projection is non-negotiable. You need to have that. Right? If you have any questions, if there is any more information that you have, whatever I've spoken to you today, if you have any question, please write it there. I'm happy to answer it now. Okay. Also, what I was going to say is, like I said, I'm gifting some coaching sessions. So if you need some extra help, if you're applying for some bank loan, or if you're looking at getting some more, guidance in terms of how to do this in your business, please book this one of these sessions. I'll be happy to spend about 30-40 minutes with you, help you through what you need to do, and help you move forward. Because it is really important for the businesses to deal with these things correctly at this point of time. Because some of the businesses may be wiped out if they don't do something about it or they don't take the right steps. So I would like to avoid that. So if there is any help that you need, please, please, please make sure you book one of the sessions, and I'll be happy to spend some time with you on phone or Zoom to help you through. If you think you can do it yourself, by all means, please do that. You don't need help, then go ahead and do it yourself. But make sure you have a cash flow projection, and make sure you are looking at your financial statements on a regular basis. So at least once a month, cash flow projection needs to be looked at least once a week. That is the most important document in the business. It's even more important than profit loss statement. I cannot stress enough in terms of what is it that you need to be doing. So one question: is it reasonable to chase an outstanding debt during COVID-19? Well, it depends. It depends on what the circumstances are. At the end of the day, you have done the work or you've delivered the service, and if you believe they have the ability to pay, you should chase it. But if you believe they are unable to pay, then you need to come up with some sort of agreement with them. Not doing anything about it is not an option. Just because it's coronavirus doesn't mean that you're going to leave it there. Even if you believe they cannot pay, have a conversation with them, have some agreement in place. Say when is a more reasonable time for you to expect the payment. What is it that they're doing to get the money raised for you, for them to pay you? It is good to have those conversations, but just leaving it on the side is not an option. It doesn't matter whether it's coronavirus or any other crisis. If you've delivered the work, you deserve to be paid. Yes, you need to be compassionate, you need to be empathetic, but that means picking up the phone and having that conversation. Does it make sense? Any other question? Another question is, what else can we do to collect on time? Yeah, of course. So what I suggest is, when I work with my clients, we have this debtors management system. So what we do is we create a system that needs to be followed. So there are 5 or 6 touch points from the job being delivered till the time the money is collected. And there is a responsibility for each step with one person or the other, whosoever is responsible for it. So ideally what we would do is we would look at raising the invoice as quickly as possible. So if it's a long-term project, we will raise multiple invoices rather than one invoice, one big invoice. Second is, when the invoice is sent across, once the invoice is sent across, we follow up and say, have you received the invoice or not? Okay, and then say this invoice is due by this date. We remind them. Then 1 or 2 weeks before the invoice is due, if there is a credit period, normally we would send a reminder. Hopefully this invoice is available with you. If you have any query, please let us know, because we are looking to get this payment in our bank by this date. Okay, and 1 day before also you send a reminder saying, by the way, I just wanted to remind you this invoice is due for payment tomorrow. Just a nice email or a nice reminder. That's all. All you're doing is you're not trying to be a pain in somebody else's butt, but at the same time you're trying to make sure your money is paid to you, and you're doing as much as possible to get that money on time, because you've done the work. When you're delivering the work, the customer is expecting best from you, isn't it? They won't want any compromises. So why is it that you are asked or you are expected to compromise when you want to be paid on time? There's no reason for you to be compromising on that. So as much as it's customer who is the king and customer who sets the rules of the game, you need to do your own rules of the game. So if you deserve the money to be paid on time, you deserve to be paid on time, and it's a mutually respectable thing. However, if you do not respect your right to be paid on time, your customers will never be respecting your right to be paid on time. So it starts from you. It starts from your head first before it goes to them. So that is what I have to say about that. So I would say, even if it's coronavirus, if you believe they can pay, you chase the money. If you believe they cannot pay, have a conversation and set some agreements in place. Saying, okay, so when can you expect the money? Okay, another question. how does sorry okay uh, how does this gifted coaching session work? Yeah, so you can actually there's my calendar link there, my contact details are there. You send me a request and we will sit down, and what I would like you to do is come prepared with what is it that you want to get out of in the session, and we're going to talk about that. We're going to discuss that, and I'm going to give you some strategies which you can take away and work on, and then we can have a catch up call maybe 1 or 2 weeks down the line to see how you're getting on. But the whole idea is to help you move forward. And sometimes it is just an external view which may help you move forward. Or it could just be that you know what you need to do, but you're not doing it. So you just need a bit of nudge moving forward. So uh, coaching sessions are just purely designed to give you some strategies, give you some confidence, maybe guide you in some way, or connect you with somebody who may be able to help you with something. So that's what this is about. So any other questions? Type in the question box if you have any other questions, guys. Okay, another question is, uh, where are you based? Oh, we are based in Hayes Business Studios in Hayes. So that's opposite the retail park, Lombardi Retail Park. So yeah, I mean that's where we are based. That's where the team is based. So if you happen to be on that side, yes, please do drop in. Uh, Otherwise, I keep attending networking meetings here and there, so I'm sure we will catch up somewhere or the other. And that's it. I think that's all the questions that I have. If there is any other question you would like to ask, please let me know. If you would like me to send you that template for cash flow projection, please put in the question box as well. I will email it to you. If you need the template that I showed you, the Excel sheet, if you need that, I'll be happy to send that to you. If you want the weekly one, I can send you the weekly one as well. Just put it in the question box if you need me to send that, or if there is anything else you need help with. More than happy to do that. So if that is the case, nothing else. So we'll just wind up here today. Please please do leave some sort of a review online if you get some time for it. If you found any value in this session, I would appreciate if you leave some feedback online, either on LinkedIn or any other social media platform that you use. You will find me everywhere, Twitter, LinkedIn, and Facebook, but I prefer LinkedIn. If there is anything that you like or you found value, please leave there so that other people who are thinking of doing some attending some of these webinars, they will also get some value. So thank you very much, all of you. Have a lovely evening and have a great weekend. Thank you.